What is going on with DeAgentAI or the AIA token? It's rallying massively today. It's going up the entire week already. The question is, who's buying here? Who's selling here? Let's have a look at the on-chain data, the data most people aren't considering, to try to figure out whether or not it still makes sense to buy AIA. Now, we're currently at $1.37. We have seen a massive run up with a subsequent retracement. There are two versions of the token. There's one on the Sui chain with 833 holders, and there's another version on the Binance Smart chain with 2,853 holders. So the majority of holders are on BNB, and we're going to look at the on-chain data in a second. On this channel, I always try to figure out what's currently driving a rally. So besides the news, I want to know who's actually buying a token. Is this just a small retail investor? Is this the whales? Is this potential short-term manipulation? And we can have a look at different data points to figure that out. One such data point is the number of buyers versus sellers. So in the last 24 hours, the price has almost tripled, while there were less buyers than sellers. 55% sellers, 45% buyers, yet the price is up. In other words, the buyers tend to move much more capital than the sellers do, despite the price going up. Usually, one would expect that the sellers move more capital as the price appreciates, as people take profit. But that's not the case for DeAgentAI right now. Trading launched roughly 3 weeks ago. And the very first day, we had a lot of new and returning users, and subsequently activity went down quite a bit. It is picking up again. However, it's mainly the returning users that are trading the token. The ratio of returning to new users is not necessarily encouraging, as in the investor base seems to not be growing quickly enough. Here's the number of buyers and sellers. This tends to be somewhat balanced over time. But really, let's just count the number of retail investors and the number of whale investors. We make this differentiation by looking at minimum holding thresholds. How many AIA tokens are actually held in a wallet? To be counted for the chart on the left, a wallet has stored at least 700 AIA tokens. So at the current price, that's roughly $1,000 worth of the token. That's what I consider retail. Still, that's only 242 wallets out of in total 2,850 wallets. So more than 90% of wallets hold less than $1,000 worth of the token. Now for the chart in the middle, it's at least $10,000 worth of the token. For the chart on the right, it's at least $100,000 worth of the token. We can see how the whales tended to accumulate, and they are now selling into the rally. Small and medium-sized retail did not accumulate over the last weeks. It's actually quite surprising that we see an artificial intelligence token rallying, because recently we see most price action in perpetual futures and in decentralized finance. But here we've got an AI-related token that's trying to push the staking program. Have a look at this fire symbol over here. This is the launch page of the staking program. It doesn't necessarily scream serious business. It rather targets the small retail investor that wants to make it big. And the APY on the staking is 28%. Where we then have to wonder, why is the team incentivizing staking that much? Do they want the average investor to just lock up their tokens that then the insiders and the early investors can potentially cash out? This happens very often with many other crypto projects. I'm not saying that this is going to happen with AIA, but the return that's offered for staking is definitely above the average market rate. Now here's what's fueling this rally. DeAgentAI is available on Binance and especially also on the Binance futures. So on the levered bets on the price. Here's the token relative to BNB. I always like to look at relative valuations. And we have been trading in a quite consistent range. And then came what I believe is very likely a short squeeze. So people were betting on falling prices, and then potentially market makers just squeezed the shorts and bought up the token to liquidate the retail investor. Because really the price discovery for the AIA token does not happen on the spot market anymore. There was only 75 million worth of trading volume on the spot market in the last 24 hours. But compare this with the perpetual futures. Here we had 2.4 billion worth of trading volume. So really, it's the bets on the price that determine where we are headed. And if enough people bet on falling prices over here, this is where the short squeeze is profitable for the market makers. Just have a look at this. The price appreciated, the funding rate turned negative, so there were more shorts than longs, and that created the continuation of the rally from $1 to now $1.50. A lot of shorts got liquidated, 11.5 million worth of shorts. And that's all liquidation fees. That's all money for the big whales that arbitrage, spot and perpetual futures. And with that liquidation, trading volume shot sky high, above 3 billion on a token again. It's got a market cap of only 132 million. The market cap of the token got traded 25 times over in the span of just 24 hours. What's interesting though is that the open interest has not yet collapsed. So it seems like the people that got liquidated, they are now simply just betting on rising prices. And that explains why we now see a deflation of the price. So the market always goes the way of most pain. If people bet on falling prices, we see the price rallying. Once people switch over too long, we see the price coming back down. It is extremely risky to bet on either direction of DeAgentAI right now, because this is a game versus the market makers. The price currently gets manipulated by the Binances of this world. Don't get me wrong, I am a fan of betting on falling prices of highly inflated altcoins, but I like to do this when there's not that much attention. I like to do this based on token inflation. And yes, it seems like the circulating supply versus the potential all-time supply for the token is very low, so the supply can roughly 10x from here, but that's going to be down the road. I think it's better to wait until attention comes down, until we start to deflate a bit more consistently, and maybe after a secondary short squeeze, when we rallied one more time, does it make sense then, when fewer people talk about the token, to then bet on falling prices. But right now it's very, very risky to touch the token. I'm actually a fan of betting on falling prices. I do this already for roughly 4 years, and I've outperformed just dollar cost averaging into Bitcoin by roughly 3x during that time. So this is a monthly chart. Had I just dollar cost average into BTC, I would have gotten this performance here in light gray. But because I also bet on falling altcoin prices, I got the performance in black. And so if you want to learn more about this, feel free to check out the premium membership of this channel. There are various videos on the topic. And I'm of course sharing my own trades as well. This is where the community did some copy trading and they then shared their own results. A link to premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.